Add. Hey, good morning, everybody. Thank you for joining me after the long weekend. Some important topics to go over this morning, including 2 lessons to help you be a more efficient trader. So I'm just going to go through my list right now of data and facts about the stock market currently to help you process and diagnose and come up with your own expectations for the week. All right, so right now, 72% of stocks are at or above their 200-day moving average. Now, generally, when we hit 75 or 76%, we are at the top of the rally. So with everybody saying, yeah, I'm gung-ho, and Jim Cramer giving the thumbs up and telling you the stock market is okay, I would be more careful. Next, the VIX, which controls volatility, is under 20. I mentioned Jim Cramer, bull market. Let's talk about your psyche, okay? So I mentioned over the weekend something like a vision board. I use the word foresight. Now, for meaning before it happens, and sight meaning vision. So when I say have foresight when investing in the market, it's almost like having a complete strategy. It's knowing your entry, knowing your exit. It's basically visualizing exactly what you expect out of the stock. So if we're looking at a stock pre-market and you're saying, okay, I expect the market as a whole to be bought up off any dip, so I'd be looking for XYZ stock to dip X percent. At that percent, I'd be buying the bottom and floating it up to the top. That's if you're bullish. If you're bearish, you're saying, okay, let's use an example. The SPY tends to reject 399 or 400. Well, it's sitting at 398.50 as of the close on Friday. So you're saying to yourself, 400 seems to be the rejection point. I've seen it over and over again, and that's what I'm looking for. Again, you're having foresight. You're expecting the market to start down here, to go up here, and when it hits the level and you see rejection, that is the time to enter your puts. Again, foresights, you're envisioning exactly what's going to happen. Now, again, vision boards, I used to make fun of them. My ex-wife had tons of vision boards. They're just putting up this. For her, it was more about an art project. I'm like, she's making a collage. Oh, she put a car, a house, a this, a that. And I used to discount it. But then I started using it myself. But not a vision board. I just started envisioning what I was going to do during the trading day. I knew that my goal was $500 profit. I knew in order to get there, I had to come up with a perfect strategy or a correct strategy. So I would envision where I see the stock going to, before I buy and enter my options. Now, that's a similar thought process as to those people that say, I have $1,000, I want to turn it into $100,000 by the end of the year. Well, you don't go from step A, $1,000, to step Z, $100,000. You have to make little increments and little victories each and every day. So the first day you say, I have $1,000. I would like to exit the first day with $1,100. That's your strategy. Your strategy isn't going all in. You know exactly, I'm looking to make $100 profit or 10%. How am I going to do that? Well, I'll invest 100. If I'm wrong about my options trade, I'll put in 200 more. Now I'm 300 in. If I'm incorrect, I will double that. I'll put in 300 more. I'll be 600 in. Again, you're only looking to secure that $100 profit for the day, exit out, start the new day fresh. So again, please follow your strategy. Most important is execution. People say, okay, trading takes a lot of energy, a lot of effort. That's not true. It's the planning process that takes most of your time. The execution and the actual trading process is maybe 5 or 10% of your entire day. So I'll tell you, again, don't trade with emotion. A lot of people trade out of boredom. Oh, I'm watching the market. It's going up and down, up and down. I want to get in. I've been on the sidelines. Well, that's a bullshit excuse. You must follow your strategy and execute. Okay, let's talk about liquidity in the market, because there is less and less liquidity in the market. There's continued money tightening, which should bring down earnings. Now, we haven't seen it yet. Well, we kind of saw it a little this morning. Goldman Sachs reported earnings. They missed. They're down 2.5%. Wells Fargo did something similar last week on Friday. They were down 4% pre-market. What happened to Wells Fargo on Friday? I'm pretty sure they bought it up and turned it green. So from down 4% to green. So I'm going to be watching Goldman Sachs. Let's talk about options in general. Call options versus put options entering this week and going forward into next week, which is the third week of the month, which is when most of the monthly options expire. Understand right now the current ratio is 2.4 calls for every 1.3 puts. So you understand that if you want to break it down to mathematics, you're about 63% calls and 37% puts right now. So it's telling you the market is still extremely bullish. Now, that could flip easily with people selling their calls on any type of spike today or tomorrow and entering into put contracts. So pay special attention to that. Next, I want to talk about some bearish or bullish divergence, okay? Bearish divergence, bullish divergence. When the stock price is here and the algorithms tell you the stock price should be up here, that's called bullish divergence because generally they'll meet somewhere higher. Same is true with bearish divergence. If the stock price is up at the top and the algorithm tells you the stock price should be somewhat lower, that's bearish divergence because generally they meet somewhere in between. So I'm just going to talk about the largest divergences I've seen in the past few days. So Costco has a 5-day bearish divergence. Lyft, LYFT, 5-day bearish divergence. UVXY, which tracks future volatility, 1-day bullish divergence. So as UVXY goes up, stocks generally go down. Next, 5-day bearish divergence. Caterpillar, meaning Caterpillar continues to go higher, and the wagers and the algorithms are saying Caterpillar should be lower. So again, I'm expecting Caterpillar to go down. It keeps going up. Apple, 1-day bearish divergence. Procter & Gamble, PG, 1-day bearish divergence. We're back to the UVXY, which is a 5-day bullish divergence. So it has a 1-day and a 5-day. Roblox, 5-day bearish divergence. Newmont Mining, 5-day bearish divergence. So again, there are a number of stocks that where the algorithm tells you the stock price should be much lower where they're at right now. But as the market is ripping higher, understand everything is going higher. Okay, so with that said, I've got a couple different stocks, and then we'll speak about the SPY. So again, Goldman is off 2.62%, terrible earnings. Goldman's been bought up since $350. What's likely to happen? If they sell Goldman Sachs off, it's likely to lose about 8% over the next few days, okay? That would be if they continue to sell Goldman. So that's something I'm watching. I really want to see if Goldman gets bought up off this bad earnings dip. Understanding that Goldman's not going to be able to turn it around in one quarter. It won't be like second quarter, all of a sudden they're profitable. It might take them an entire 3 or 4 quarters, a full year to get down, to get back to profitability. So I was watching the US dollar. Now, as I'm watching the US dollar over the weekend, it spiked back up to like 102.50. It's at 102.23 this morning. It's dropping. Let me just show you what it looks like. US dollar was spiking a little, then it dropped. As the US dollar goes down, the markets get stronger. Now, here's the catch. You had an analyst from Morgan Stanley who analyzes the US dollar, and he says the US dollar should go down another 4% in the next month or two, down to 98. So if we're at 102 and it goes down to 98, that is a bull case scenario for the market. What's crazy is you also have some guy, another analyst from Morgan Stanley, that says he sees the market dropping 10 to 20%. So again, it's like everybody has their own opinion. I can think one thing. There's another person thinking another thing. We're both analytical people with a completely opposite view of the market. So understand, two guys from Morgan Stanley. One guy says dollar is going down, which means the market should shoot up. The other guy says the market should go down 10 to 15 to 20% in the first quarter from where we are now. Again, understanding that 72% of stocks are at or above their 200-day moving average. And generally, when we get to around 75 or 76%, that is generally the top of the rally. So me, again, I'm more apprehensive. I'm not buying this bull run, the recession over, soft landing, China's okay, no COVID. No, I'm more of a wait and see approach. Again, I'm taking it day by day. I'm a swing trader. If I was a long-term trader, again, I would probably have a ton of money on the sidelines. Here's the catch about that. Let me tell you about people that work for hedge funds and institutions. If you are managing a fund and the market goes up like it has so far in the first 2 weeks of January, okay? If you don't get involved in that market turn up, meaning your money's on your side, the money you're managing is on the side, you're going to get fired. You're going to get fired. If you miss the run up, you're going to get fired. Here's the thing. If you invest and there's a run down, you don't get fired. So as long as you're investing in the market, it's like you can't miss the run. If you miss the run, you're fired. If you catch the run and it goes down and it's at a worse point in 3 weeks, you're still okay, even if you're losing money. So that's why I happen to think institutions, big money, hedge funds continue to buy up every dip, because if they miss the run, they're going to get in big trouble. All right, so then we'll talk about the SPY and what we're seeing. The SPY is off 0.18% pre-market. Most of the large orders are outflows. Again, same thing I spoke about Friday. You have the people that are going to continue to buy up the dips. So if you're one of those people that is buying up the dips, then you expected Friday's dip and the rise off Friday. However, again, I'm expecting the market to go down. I saw a question about Amazon. So here's my mistake from Friday. I mentioned pre-market that I was actually looking for Microsoft to go down, and I mentioned one other stock to go down. Then during the day, I confused Microsoft with Amazon. So instead of buying Microsoft puts, because I thought Microsoft could potentially go down to $231, and I was looking to enter at $237, I went into Amazon puts, and I realized my mistake after that. But then I looked at the Amazon chain, and again, I said to myself, all right, these Amazon puts could go from $1 all the way up to $4, all the way up to $7 if I'm correct, and the market tanks. However, my Amazon puts expire this Friday. I've got 2 contracts. I'm holding them. I haven't made a decision about that. Somebody's mentioning Tesla. So let's mention some stocks pre-market, okay? Again, Goldman's off 2.61%. The US dollar is down. The SPY is down 0.17. You've got Amazon up 0.6%. Tesla's up 2.48%. So again, Tesla's had a strong run. Kathy continues to buy it. She bought more stock on Friday. She bought 114,000 shares of Tesla, which is pretty significant. Now, something I don't understand about Kathy is why she doesn't use the dark pool levels. If she's buying these stocks on the dark pool, then nobody has to know about her purchases. But she makes them very transparent and very clean and clear. And what happens is people jump on the bandwagon. Again, Tesla's been struggling. Tesla's has 3, 6, 9 out of 12 inflow days with some very significant volume. However, Tesla was at 108 on the low. It's at 125 on the high. So we're talking about 9 out of 12 inflow days, and the stock is only up, 15, 16, 17 points. So it's up about 15% over that last week from the low. So again, Tesla seems to me that it could be a little more dangerous than I'd want to get involved with. So I'd stay away from Tesla. Again, Apple's at 134.76, so just under 135 as we close on Friday. Understanding that 135 on Apple is a pivot point, meaning stocks can either, you mentioned Apple. Excellent, Ellie. Thank you. Meaning if Apple gets bought up, you could see rejection, and we'd have to look at the dark pool levels for the Apple. So let's bring up our Discord, and if you want to join Discord, there should be a link below. But what I'll do for Apple is I want to look at the dark pool levels. So I would do TR, DP levels, and Apple. And let's look at the dark pool levels for Apple. And there we go. Make sure you guys can see it with me. Okay, so as the dark pool levels, what am I looking at? Well, I'm looking at the biggest level, 4.96 billion at 130. Well, that kind of makes sense because 130 has been major support on Apple. In between 130, 131, 32, 33, dark pool levels are really small. 134.5, which used to have a larger dark pool level because Apple used to reject at 135. That level is gone. So again, given all things consistent, if we start the week, and I'll just say Monday and Tuesday, and they continue to buy up the dips, then Apple has a good chance of running all the way to $140, which should be the next rejection level. So that's what I'm looking at Apple. Let's just see what other questions we have or what else we do. I'll show you what else I do on Discord as I go in. Team Cheek, Coke. Okay, so let's look at Coke. I haven't looked at Coke in a while. Let's just see what Coke looks like right here. So we'll see the net flow of Coke. Okay, so Coke's actually, okay, this is a perfect example, okay? So everybody can see what the chart looks like here. So what do you see? The white is the stock price. So the stock price is going through the roof. Coke continues to go up. Price for puts, or the premium for puts, is right here. The premium for calls as Coke goes up keeps dropping, meaning nobody wants calls as Coke is getting higher. So what would you call this? You would call this bearish divergence. Stock prices up here at the top. The algos are telling you, well, they should be somewhere in between down here. So you're talking about Coke getting back under, $61, probably somewhere around here, $60.80. But if Coke's going to lose 40 cents, you're talking about what? Like 4%. So again, Coke has a bearish flow. UHAL. Do you mean UAL, like United Airlines? I don't know if there's a UHAL, but we'll look it up. Let's look at the net flow. Let's see, net flow, UAHL. Hopefully I typed that in right. Yeah, I think you mean UAL. So TR, net flow, UAL, United Airlines. So we'll look it up because United's been continuously being bought. All right, so here's something interesting. We can look at United Airlines. What do we see here? Well, we see the stock price is up here. Remember, United Airlines going through the roof. I mentioned it last Monday when it was $39. Now it went over $52. It's back at 51. What do you see? See the stock price going up. You see the cost for puts extremely high here and the cost for calls down here at like the normal level. So again, there's not much extreme divergence here. If I had to guess, I would say United will probably fall to start out this week just based on this volume level right here. But again, I'm looking for something with a larger divergence, meaning stock prices up here, algos tell me it should be down here. Let's talk about something I mentioned already in the video. I mentioned Caterpillar has a 5-day bearish divergence. I meant U-Haul. Oh, okay. Let's see. U-Haul had a nice gap up today. Well, anything that has a gap up starting the week, the algos and flows won't be updated to match it. So if you want to look at U-Haul, let's just see U-Haul. Okay, U-H-A-L. Okay, yeah, I see it's gapping up this morning. Extremely low volume, okay? I would tell you to be extremely careful. It looks like pre-market trades, there are none this morning. So the last trade was 5 shares of stock, $2 higher on Friday. That gap up means absolutely nothing. There's no volume on U-Haul. So be really careful with U-Haul because, again, there's no shares. You could look at what happened. The last large quantity was $64.50, which is right where we closed. Again, there's no pre-market activity on U-Haul. So that would be something I'd be staying away from this morning. You got to look at volume. And the same is true when you're trading options. You want to look at volume of your options. If there are hundreds or thousands of contracts being traded, then you're like, okay, it's extremely liquid, which means if I want to buy something, there are people on the other side that want to sell it to me for a standard price. If there's low volume on whatever option you're trading, you're looking at something and there's very little activity, then you're saying to yourself, the bid's going to be here, the ask could be here, the spread's going to be significantly greater. I will mention a story that one of my friend's fathers who invests millions or tens of millions of dollars, he came to me on Thursday. And this is a great story because I completely disagree with him. Yeah, I'll get to the other question in 1 second if we can just remember that. So here's the thing. He came to me on Thursday and he said to me, he wants to invest $10 million and he wants to be bearish in one of the drug companies that are making COVID drugs because he believes that all these COVID drugs from Moderna, Johnson & Johnson, Pfizer are all going to be proved inefficient and proved more harmful than helpful. Now, he's a conspiracy theorist. So I told him, well, if you're expecting something to go down and you want to see it drop the furthest, you're going to have to go out like 2 years because he's like, there might be litigation, there might be other things going on. So I want to go 2 years out of my options. So I said, okay, 2 years out on Moderna puts, you're looking at like January 2025, Moderna 150 strike price. You're assuming it's going down to $80 per share, and you're going to pay like $2,300 per contract. It's going to be extremely expensive. And then I told him, if you're correct, you'll make a killing. However, I completely disagree with you, and I think Moderna has more of a chance of going from $184 or $190 all the way up to $250, and you're going to lose your $10 million of investing. And he said, thank you for your concern. I happen to be a conspiracy theorist, and I happen to think Moderna, Pfizer, and Johnson & Johnson are all going to get hit with massive lawsuits on why their COVID drug is killing people. So again, people can have all types of theories. There are ways. Okay, what do I think of? I think you probably want Microsoft and NVIDIA. So here's the thing about Microsoft. And Microsoft at $237, I expected Microsoft, and I expected the market to actually, be a little more choppy. If the market is choppy, then I can see something like Microsoft, which is at $237, going down to $231 and finding support there. If it doesn't find support there, you're talking about $226 on Microsoft. But again, all of these stocks that everybody's mentioning, Apple, Amazon, Google, Microsoft, NVIDIA, they're all going to follow the market. So if the market gets bought up this morning or tomorrow and every drop gets bought up and we push 400 and we break 400 heading to 410 on the SPY, then shit's going to continue to go up. Just because I don't agree with it doesn't make it not happen. With that said, I would just be cautious. But let's look at NVIDIA, because I haven't looked at NVIDIA. And when I mentioned NVIDIA, I mentioned that people or institutions like to be involved with industry leaders. And if you know about NVIDIA, they are number one in the chip sector. So that's the company that people are going to look for. It's like, so let's bring up NVIDIA. Okay, so here you go. Extremely bullish case scenario here. You have the stock price at a high, the price for calls at a high. They've been buying calls right here. The price for puts, which was up here, filled the gap and gapped back down to where it was before. So what does this tell me? It tells me NVIDIA is still extremely bullish. Does that mean I jump right into NVIDIA? No, you have to have your price target. And you say to yourself, we can look at NVIDIA right now. You have to have a complete game plan. So I'm looking at NVIDIA. I'm going to look at the 5-day chart. Again, 5-day chart's going to look like a complete angle up of a triangle. I wouldn't be buying here. Again, you're looking for a dip. So we saw a dip come in. I guess it was Friday morning. It looks like NVIDIA dipped down to 161. So entry on NVIDIA could be somewhere under 162. Again, all you do is write it down. NVIDIA, entry, 162. It's on your watch list. What do? You set an alert on your phone. Here, I'll set the alert. Alert, NVIDIA, put in 162. So now when NVIDIA hits 162, my phone's going to beep at me. So I'm going to say, okay, NVIDIA at 162, if I still want to be bullish, that is my entry. Where would my exit be on NVIDIA? Okay, so let's just pull up a larger chart on NVIDIA. There seems to be some rejection right around, we broke that rejection level. There seems to be a rejection at 170, and then you're looking at the high for the 3-year high, which would be around, the 3-month high, which would be around 180. So again, I want to look at NVIDIA. I want to use the flow and algos room. I want to make sure it's bullish. And again, if you see something like that, you could put it in the back of your mind or put it on your watch list about NVIDIA. Now, someone mentioned Coin, Riot, Mara. We're late to that. We're late to that party. Again, Bitcoin's been on the uptick for, I believe, 5 straight days now, or a 1-week time. As this happens, there are a lot of short positions that are being covered. A lot of shorts on the Bitcoin in the crypto market are being covered. I read one day there was like 240 million, then 24 million, then 41 million. So a lot of shorts are covering the position. What happens when shorts cover a position? It drives the price higher. So we see, where is it? Bitcoin's probably at like 21,000 and change this morning. So what's happening positive with that? Coin, Riot, Mara, all positive reactions. They're probably up 8% pre-market, 6% pre-market. Again, if you catch the bottom of these, which we're late on, if you caught the bottom of United Airlines, great. You're up 20% in a week. Carnival Cruise Lines, we spoke about the run up to 8, and it was asked, is the run going to continue? Well, the run's up to $10.50 now. So from $8, we're still up another 25%. You're at $10.50. One of the stocks that I noticed pre-market that was green was Carnival. So everything else is struggling. Okay, so yeah, that's Coin. So let's talk about the SPY real quick. Let's just get that comment off there. SPY real quick. Again, we've seen rejection around the 400 level. That's what I'm paying attention to. When I say 400 level, we can go plus or minus 20 or 30 cents. So I'm really keeping my eye on the SPY level of 450 cents. Okay. At the same time, I'm keeping my eye on the US dollar, because if the US dollar drops under 102, and this morning, where are we sitting with the US dollar? Let's just see. US dollar. Okay, 102.13. Again, the chart on the US dollar, it's kind of hovering right there. A big drop from right over on this side right there. So we were at 103.24, 103.50 over the weekend. It's just certain levels. So again, 102.13. If the US dollar continues to drop and the 2-year continues to drop and the 10-year continues to drop, then the market will continue to get strong. If you see a spike in the US dollar, you see a spike in the 2-year or 10-year, understand, if that spike holds, the market will drop. So sometimes I see the spike first. I'm like, okay, the dollar just spiked 50 cents. The market's going to drop, and the market hasn't dropped yet. That's a great entry into some puts. When you see the US dollar spike or the 2-year or the 10-year spike, the same is true on the counter. If you're seeing the US dollar up here and then it just drops 50 cents and the market's still relatively flat, you know it's about to spike. With that said, I've got to head over to Discord. I appreciate everybody joining me. Large crew this morning. If you liked what you saw, give me a thumbs up. YouTube is algorithms. Make a comment on the side, or you're more than welcome to join our Discord. We have live streams this week. I believe Romeo is going live probably 2 or 3 days. On Thursday, he will be going live to the public. So if you want to see it on YouTube, please hit that subscribe button, and you'll see Romeo's live stream on Thursday. And remember, he tends to trade earlier in the morning. He's got great success between 9:30 and 10:30. Me, I'm more of a wait and see kind of player. I want the best entry. I want to follow my strategy, and I want to execute. With that said, I'll see everybody over on Discord. Thank you so much. Have a great day.